Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you a massive opportunity that just presented itself, and I'm going to show you how to use this massive opportunity in order to continue growing your portfolio consistently. Now, if you're new to options trading or you're trying to use option trading in order to get some extra money, then this is definitely the right video for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be going over a massive opportunity that just presented itself. Now, this might be a massive opportunity to me and not you, but stay to the end of the video and then you get to decide. Now, we're going to focus on one stock for today, and I'm going to show you another opportunity that's coming. So, you guys know how we do it. We like to go ahead and get down and dirty with options, but we're going to pause that for just a little bit. For today's video, we're going to be using Sweet Green, ticker SG. Now, Sweet Green is one of those companies that their main product is actually food. Now, the food that they offer is highlighted right around salads. Now, the reason why this is a massive opportunity, as of making this video, Sweet Green is trading at $22.95. I'm going to go ahead in just a bit and show you how I'm going to use this opportunity in order to make money. Now, with Sweet Green, the one thing I like about it is that this company offers food. So whenever there's a market pullback, this is one of those companies that's not going to feel it as much as other companies such as AI or quantum computing. Now, let's go ahead and we're going to jump into Sweet Green. I'm going to show you why this is such a massive opportunity. Now, in order to do that, we're going to go ahead and start off with the Robinhood Advanced feature. And that's it right here. We're going to go ahead, we're going to open it up. And here we have Sweet Green. We're going to go now to the 1-year chart. And as you can see here, I want you guys to follow this blue line right here. So with this blue line right here, it shows you that the average cost is around $32. Now, the average cost right here is the 200-day moving average. So what is telling you that over the last 6 months, the average price of the stock has been around $32. Right now, the stock is trading right below $23. So that is why this is a massive opportunity. Now, the company is a massive opportunity because although the company is trading at $23 right now, if you go ahead and you do your own due diligence, you will be able to see that this is a good company. Now, I'm going to go ahead and go over the charting system for you, and we're going to jump back right into Robinhood briefly. Okay, right now we on stockcharts.com, and if you guys want to know how to use this charting system right here, just go ahead and look at the video I did right before this. Now, this is what I want to highlight. Once again, we're going to be following the red line right here. And as you can see, the red line goes to the $32 average. So once again, for the last 6 months, this stock has been trading at $32. This stock high was around $45, which is depicted right here. And now, like I mentioned earlier, the stock is trading right around $23. But of integral importance, I want to show you what's known as the RSI, one of the indicators I use to trade. The RSI, or better known as the Relative Strength Index. If you guys have never seen this before or you want to know how to use the RSI, just go ahead and look for the video on my channel. The name is literally RSI. Now, the RSI right now is at 2659. Now, I do not buy whenever the stock hits the bottom here. I always buy when the stock starts to go up and it shows clear signs that it's going to go up. So keep that in mind when we get into the option strategy that I'm going to use in order to make money with this stock. Now let's go ahead and go back into Robinhood. So how am I going to use this opportunity that's presented itself in order for me to make money using Sweet Green? Well, I'm glad you asked. So now let's go ahead and jump into the option chain. So we're going to go to Trade SG Options in order to open up the option chain. For those of you new to the channel and new to options, this area right here is known as the option chain. What this area does is that it gives you enough information in order for you to make a well-informed decision. You have information here such as strike date, strike price, whether you want to sell or you want to buy, etc. So how I'm going to use Sweet Green. Now, first of all, I already have Sweet Green in my portfolio. If you guys have seen any of my other videos, you guys would know this. But now there's an opportunity. I'm going to get more. So what I'm going to do with Sweet Green, the number one thing I'm going to be doing is I'm going to be patient and I'm going to wait to see if the stock is still going to decline some more. The stock is going to be releasing earnings on the 26th of February, I believe. So just pay attention to that. Now, once it shows clear signs it's going to go up, I'm literally going to buy about another 200 shares in order to trade options. Now, when I'm going to be trading options with this, what I'm going to be doing is covered call option strategy. So in order to get that done, I'm going to go to sell, I'm going to go to call, and then I'm going to choose my strike date. The one downside about Sweet Green is that it only does monthly options. So the next strike date is going to be March 31st. So let's go ahead and go into March 21st. Now, go ahead now. I'm going to choose my strike price. Now, I'm pretty sure I have one contract open already. Let's see. Yeah, so I do have a contract open right here, but I bought that a while ago. If I would do this right now, today, then I would be going with the $32 strike price right here. And the reason for that is because I know earnings is coming up. Now, the other reason is that even if the stock were to go crazy and parabolic, then I have no issues losing it. So if you were to buy the stock right now, today, at the $23 strike price, and you do a covered call at a $32 strike price, if the stock does go ahead and go past this right here, then you do not have to worry. The reason why you don't have to worry is because you're going to benefit from what's called stock appreciation. So if the stock goes past 32, you're now obligated to sell your shares at $32 price. The difference between where you bought it, which is going to be the $23 price, and the $32 price is going to be $9. When trading options, each option contract always contains multiples of 100 shares. So what you're going to do, you're going to multiply the $9 by 100 shares. And right there, you're going to be gaining $900 in your portfolio. And that is why this is such a massive opportunity. Now, we're going to go ahead, we're going to choose the 32. Our chance of profitability, or the chance of us winning this trade, is going to be close to 90%. Again, I choose this extremely high because earnings is right around the corner. Now, with the $32 strike price and the almost 90% chance of profitability, you're going to be paid, because on this channel, we don't just buy stocks, we buy stocks with the intention of selling it or doing some kind of option strategy in order for us to get premium. And that premium we get is what allows us to grow our portfolio consistently over time. So the premium we're going to be getting right now is going to be 0.6 or $60. Each option contract is multiplied by 100 shares. Now, like I said, this is known as the covered call option strategy. Another strategy that you can use if you want to do Sweet Green is going to be, let's go ahead, I'm going to walk you through it. So before we go over the other option strategy that I would look to employ with this stock, always remember two things. Always remember to do your own due diligence. Although this is a massive opportunity, it does not mean you have to jump in at every opportunity. Do your own due diligence and you make the decision based on what you discover. The second thing you need to do, always make sure you have an exit strategy before you get into any option contract. Now let's go ahead. I'm going to show you the other trade I would do if I'm going to get back into Sweet Green, which I will. So now we're going to go to buy, and we're going to go to call, and we're going to choose our expiration date. This time we're going to choose our expiration date way out, and I'm going to be going with the January 16th, 2026. Now, I'm going to be going to look to choose my strike price below the current share price, and I'll choose the strike price right here at the $20 strike price. Now, at the $20 strike price, I'm going to have to pay $8.40 in order to pick up this contract. $8.40 in real life is going to be equal to $840. So if you're trading with a small portfolio, this is one option strategy you can consider. The reason for that is that you're going to have to pay $840 in order to control 100 shares of the stock, as opposed to spending $2,300 outright in order to buy the stock. This option strategy is none other than the LEAPS option strategy. LEAP stands for Long-Term Equity Anticipation Securities. Now, if you're paying attention to the video, I did just mention we don't just do buying. We do buying with the intention of selling in order for us to grow our portfolio. Now that you have one LEAPS option contract in your portfolio, you could use that LEAPS option in order to go ahead and sell covered calls. And that is going to be what's called the PMCC, or Poor Man's Covered Call. That is another strategy that can be used in order for you to be consistent and grow your portfolio over time. Now, that is it for Sweet Green. That is it for that massive opportunity. Now, I did promise you that there's another massive opportunity that's going to be coming in the market. So I'm going to go ahead and show you that right now. And for that, it's going to be with the stock Sound, SOUN. Okay, so here we are on Sound, and be careful, this stock is highly speculative. So the opportunity that's going to be presenting itself is that Sound has been in a decline. Now, it's on my radar, and based off of my portfolio, I'm looking to make sure Sound goes down. If it does hit the $8 mark, then it's definitely going to be on my radar. So that's just an added bonus for you guys that stayed to the end of the video. But Sound, as you guys know, is already in my portfolio. If it does go down, I'm looking to buy more. Now, to summarize this video, there is massive opportunity in the market, but most of us, when we see this massive opportunity, we decide not to get into it because it's always when the stock is down. When the stock is down, people always have fears that the stock may continue going down or they might lose their money. But if you do your due diligence and you do these strategies on good companies, then you have no fear. Now, in order for you to learn these strategies and the other strategies that we use on this channel in order to help you grow a small account portfolio, then go ahead, like the video, subscribe to the channel. And most importantly, if there's anyone out there struggling to grow a small account portfolio, go ahead and feel free to share the video with them. Let's try to help as many as we can. Now, until the next video, keep pushing your investments.